Hello everyone, and welcome to Day Trader S&P 500. This is Dale Woodson, one of Timer Digest's top-ranked stock market timers. Today is January 10th, 2021. We're going to do our weekly update of the S&P, and we'll do gold, and we'll look at NASDAQ, okay? So we want to remind you guys that while I'm relatively new to to YouTube. We've been trading for since the 90s, and here's our 3-year trading record for our short-term report, which I started in 2018. As you can see, our future trades have been moved to Striker Securities as I average over 700 trades a year. So if you don't want to day trade all day like I do, you can contact Striker. They auto-trade Woodson Wave Report signals. Okay, let me see. I want to go and back up just a little bit and go to our January monthly that we put out at the beginning of the month. And here are our price projections and time projections of the market from the March low. I do want to point out that this move from this wave 4 to this wave 5, it could be one on intermediate wave, or it could be the 5th wave all the way from the 1987 high. We're going to go with the bullish count, but we'll have to watch this decline, okay, as it unfolds. So just wanted to give you guys that alternate count up there, but at a minimum, our target, a long-standing target of 39.96, once that's achieved, we should at a minimum retrace this 5 waves from the March low. Okay, we have our price and time targets. It's a little review from our Fibonacci time spiral. We expect January 25 for the wave 1 high. 55 days later marks March 19th, or April 23rd is the next turn date in our Fibonacci time spiral. Okay, and then we have wave 3 up. If this is not the end of the entire move, a 4 down and then a 5 up. Okay, we've got our price and time targets there. September for either 3 equal and 1 here, just under 4,700, or a 1.618 multiple, just around 5,800. Well, this is getting way in advance. We just wanted to review our 2021 ideal Fibonacci price and time targets. We'll see how that unfolds. In the meantime, let's get to the business at hand here, and that's the March low. You can see that's a primary wave 4, and that could be the end of the move there. Let's look at these Fibonacci extensions real quick. We'll get our wave 3 was almost exactly a 1.618 multiple right there. Okay, let's get rid of that, and we'll look at a Fibonacci extension for our wave 5. Again, this is somewhat of a review, but in case we've got a lot of new subscribers out there. So you can see wave 5. I don't have that exactly on where it should be, but we had a 39.96 target over there, okay? And we're looking for January 25 for a time. That's where wave 5 equals wave 1. Okay, flat correction over there. So that's the daily chart. We can drill down from this October 30th flat wave 4 low, and you can see here is that October 30th low. There's that steep rise in wave 1, the minuscule correction in wave 2, and you can see wave 3 is unfolding. Our make or break for this count is this low here. Okay, so anything below this wave 2 low of 35.11 means that this count is negated. We expect this third wave here to gain equality with wave 1 at 39.31. Once that's complete, we'll get a wave 4 pullback. There's no sense in doing a retracement levels until that is in. And then wave 5 again at 39.96. Well, we could do that if this hits our perfect target. Get a little bit ahead of ourselves, but why not? Okay, if we get from our wave 2 low to our anticipated wave 3 high, you can see a pullback here to 37.72, 37.23, 36.74. And you'll notice that 618 retracement at 36.74 will stay just above this wave 1 high, which is 36.46. Okay, that was our make or break, and that's still a real key level that you don't want to see broken to the downside. So we remain bullish. We're looking for 39.96. We've got a couple more, 2-3 weeks till the 25th, a little over 2 weeks. So we'll see what happens on that, and we remain bullish. Okay, let's move to gold. Gold is about breaking our wave count. Okay, this is the wave 3 high from the March lows in August. We had this descending triangle with a flat bottom and a descending top and a throw under in wave E of 4 over here, and we had a first and second wave high. Okay, I'll correct this on the fly because, as you know, or maybe you don't know, wave 4, I have it here, cannot go lower than wave 1. So this cannot be 1 up, 2 down, and 3 up. So we know that is wrong. What it could be is a series of 1s and 2s where, well, I could take out, I'll leave that there, where that's 1 and 2. Let's move that 4 out of the way. Okay, let's get in here and do a Fibonacci extension. But 2 cannot retrace more than 100% of 1. So this could be 1 and 2. Then we could have another 1 and 2. But that count that I just showed you is negated with any move below this low here, which is around 1817. And the entire 5-wave advance from the March lows, that being a wave 3 and this being a wave 4, is negated with a break below. This has been our long-standing make or break level right around 1766. I think it might be 1767. So a move below there breaks this entire count from the March lows, and we'll have to reevaluate. So we may as well take that 1, 2, 3, 4, 5 off. Okay, and this here, and we'll see if this 1, 2. Well, let's see what kind of retracement that is, just to get curious here. On the we're doing this cold. What kind of retracement is that? That's near the 618. So we'll see how that plays out. That's a better indication there. I haven't broken that down because that 4 would overlap that 1, but that could be 1. Okay, again, it's all based on this here, the 1766, 67 area. I don't know what the exact number is, but any break below that, and we'll reevaluate our count. We'll come up with a new wave count. Okay, it is interesting that that's right by the 618. If that holds, let's do a little extension here and see what we get on this from here. We get a wave up. That would be in theory 1, and that would be in theory 2. And then we'd see a move up to 2022. Okay, so obviously we need a break of that high for this to come and a hold of that low. So there's our parameters. This high here, right around 1958, and this low here around 1767. Until one of these is broken, we'll see what happens. We'll remain bullish up against this low. Okay, that's the update on gold. That is an hourly chart on gold. I wanted to drill that down a little closer. I'll leave that Fibonacci retracement up there. And then we'll get to Tesla. Okay, Tesla. I got a daily chart here. I broke this down because I want to get to the very beginning of 1. And it looks like we need to go back to around June 4. So let me put an extension on 1, try to get fairly accurate here. We already know where 2 and 3 went, and let's go all the way up to 4. 4 is there. And I'm doing this blind too. Okay, so 4, wow. Okay, so 5 would gain a 3.618 multiple at 954. And you can see from this fourth wave, there's a triangle here. Fourth wave low. This first wave was much higher than we thought. Okay, we thought it was 1, 2, 3, 4, 5 here, and then it extended and it extended again. So if that's 1 and this is 2 down here, you can see 3 gains equality there, right around 932. Then we get a 4 and then we get a 5. So this thing just keeps going. We're looking at 900s. I wonder what that 1618 is up there. That's even 1100. We'll see how that goes. But this looks like 1, 2, 3 should go here. Then we should get a pullback in 4 and a move up to 5. Okay. We'll see how it goes. But by the way, what goes up fast comes down faster. So this is an unbelievable parabolic move here, as you can see. And it's indicative of a third wave. Okay. And this first wave, the angle of ascent is amazingly vertical, as is 3. So this thing going and going and going. Maybe we'll see if it tops around January 25th, when we're expecting the top in the S&P. Okay, until next time, take care, everyone, and thanks again for visiting our channel.